And what I'd like to do is put artificial intelligence in the context of financial services. And I think to really do that best, you really have to look at some of the major technological advancements that we've had in the last, I would say, couple decades. If you look back in the 1970s, we had the birth of the first personal computers. And then you move to the 90s, we had the advent of the internet. In the 2000s, we had the emergence of the mobile computing. And really, if you look at all those, I would say, technological quantum leaps that really led to today's day and age, or really paved the path for today's day and age of all these new emerging technologies like artificial intelligence, blockchain, mobile computing, and whatnot. But really, I think if you look at some of the transformational themes more broadly across the industry, there's really four main themes. The first one's around new customer demands and expectations. So as you guys know, most of us are on our mobile phones. We transact on that daily, whether it's social, whether it's purchasing, different types of products and services. But it's really changing the ways that customers are interacting with their institutions, and more importantly, how do institutions need to service their customers? And it's really at that point of transaction. So how do you start to address these customers' changing needs for these digital experiences? One of the things that we're seeing is it's now it's a 24/7 on the go model, right? And with a lot of these organizations, when they're sitting on this legacy technologies, how do you start to respond to that through the way that people want to interact? Through texting, through chatbots, different digital channels that they're accessing. So that's one of the transformational themes that companies are facing. Innovation with business growth and operational efficiencies. So all this innovation that's coming into the space now. I know when I started my career in the late 90s, I was talking to a few of you guys. I started in an incubator on Wall Street, and at the time, the disruptive technology was the internet. And so we were trying to get everybody on their online presence, moving away from the brick and mortars. But now, my career coming full circle, you're seeing a lot more disruptive technologies in the space. Obviously moving to cloud technologies, these kind of data-first, cloud-centric, and API-centric types of architectures. You've got technologies like blockchain, as we mentioned. We've got cryptocurrencies, but a lot of these are for driving top-line growth, but also looking to maintain bottom-line efficiencies. And so there's a lot of applications that we have for AI and machine learning in those spaces. With risk and regulatory compliance, that's one of the kind of the hallmarks for Protiviti. That's how we started as a company, is really in risk and compliance. But really the changing regulatory space that's happened since, I would say, the last financial crisis, it's really shifted. We're seeing a lot of our clients looking at very short-term needs around new regulations that have gone into effect, like GDPR, MiFID II, and some of this, the open banking standards for PSD2. But that's just a changing space, and a lot of this data that you've got to collect and be able to report out on. We're seeing different types of fintechs and innovative third parties out there that are producing big data aspects and AI machine learning around reg reporting. And so that could be for BCBS 239, it could be for MiFID II, all these different types of reports. We're starting to see that. And then lastly, security and privacy. We touched on that yesterday, and especially as it impacts the insurance market. It's in fact, obviously that's a top of mind topic for all institutions. It's always going to be an arms race in terms of how do you protect customer information. I think with some of the recent attacks that we've seen, with the Spectre attack and Meltdown, it's no longer attacks and cyber attacks that are facing applications and software. It's actually now starting to affect hardware components as well. So you've got to keep that into the consideration. But really, what I've seen in my career is as you start to look at organizations, we're moving away from an operating model that existed inside organizations. It's now moving out to the cloud. And so it's this distributed operating model that we're working into. And that's really triggered this transformational imperative across financial services. So I like this image here. This is showing, I would say, the Gartner's proverbial hype cycle around different types of disruptors that are affecting the space. And as you can see, machine learning and AI is kind of at the top of the hype cycle at this point. But there's a lot of technologies that are disruptive in their own right individually, but if you take them as a cumulative effect, you can start to see how they start to pave the path for AI and machine learning. So we talked about mobile computing. It's really, at the end, the plateau of productivity around mobile computing. If you look at your mobile phone, it's just exhausting all different types of data, right? It's behavioral data, it's transactional data, location data, social data, just petabytes of information that you can start to glean and access, to start to look at products and services, customer behaviors. We talked about cloud computing yesterday, just having the modern architectures to be able to tap into APIs, tap into other types of digitally native companies where you can start to share information. We talked about neural nets yesterday. I think that's one of the table stakes that you're going to need to be able to tap into various networks and different types of data sources. Biometrics, that's something else that we talked about and touched on yesterday with the Fitbits and different types of applications that you're tracking vitals and sensors that are picking up different types of information that could be gathered. And then blockchain and digital currencies. I think a lot of you guys, over the holidays, if you guys are following the crypto market, that's been a very volatile area. I was just out in Singapore late summer last year, and all the discussion around the ICOs and China's stance and some of the regulatory stance in Asia Pac on cryptocurrencies is really affecting the volatility. But at the end of the day, digital currencies is going to probably be the future of payments. It's the future of payments. It's programmable money. If you look at your experiences when you use something like Uber, you don't pull out a card, you don't pull out cash. It's just part of your customer experience, and you're going to start to see more and more of that, and that's where AI can start to play a big role. As you start to program money with digital currencies like Ethereum, where you can kind of put smart contracts on there, it's all code and it's all data. And so if you can get information from these digital currencies, there's ways that you can leverage that for calculating credit risks, getting behaviors, different types of information that's there. And so just another area where there's going to be lots of data. And then on the backside, that's coming up the curve here, you've got Internet of Things, and that was a big focus that we talked about yesterday. I know Jerry mentioned a lot about IoT, but just various beacons and sensors that are out there that can start to gather information through video, through text, through different types of signals. You've got Alexa at home that you're getting voice to text translations, but moving to these, moving to more voiceless and or voice interfaces that are not mobile specific. And then the combination of these things, and this is what I was talking about before. I've heard different conversations with our clients, and there's innovative third parties that we deal with that are out there. There's a company called BanQ that's doing work on the blockchain, and they're leveraging Internet of Things to provide lending to the underbanked and the unbanked in places like China and India. And so with that, if you start to look at that and use IoT, and we talked about how you need to have compute power that's closer to the edge, and there's this whole aspect around edge computing that's happening with some of the big cloud providers. But there's ways that they can start to provide financing for people that are underbanked that never had them before, and this is through blockchain technologies. But through these, they could have rice yields that are coming up that are sustainable, crop or rice yields that collect data, and we're hearing people putting and creating products around there like futures contracts and things of that nature. And then VR and AR, obviously with augmented reality, that's coming up, and as we start to see that emerge a little bit more, data that's being tracked around, your eye tracking and different types of ads that can be put in front of you. These are just all wealth and data sources that can start to be tapped together, correlated through AI, and start to provide some benefits and value to companies. So if we look across just the spectrum of financial services, this is showing some of the major pillars across banking, payments, capital markets, and insurance. I would say the edge of the digital disruption has really affected the banking and payment space, as we all know. I think we mentioned some of the leaders that are in the banking space, like the USAAs and the BBVAs of the world. They started up with these open platforms. They started to move off the legacy client server and allowed them to be a lot more flexible, where they could start to sandbox with different types of fintechs and innovative third parties. But they're using machine learning in a lot of different types of applications. Customer service through chatbots. Leveraging that data, taking voice to text from call centers and marrying that together, looking at different types of sentiment analysis and figuring out better ways to service your customers. The consumer lending space, with companies like Sophie, where they're targeting certain demographics and they're looking for, like we call them these millennials, called the Henrys, that are high earners but not rich yet. So you're able to kind of zero in, leveraging data and learning around some of these behaviors to do better credit risk calculations and credit decisions. In payments, around AI and machine learning, we're seeing a lot of applications around transaction and fraud monitoring. One of the things that when I was out in Hong Kong, one of the things that I thought was pretty striking is if if you look at some of the transaction volumes that they're dealing with companies like Alipay, and Tencent, at the height, and I think this is, if you look at Visa, I think they process about 25,000, 30,000 transactions per second. But in the Chinese New Year, Alipay, I think with these red envelopes, they were transacting volumes on the order of hundreds of thousands to millions of transactions per second. So when you start to deal with that type of transaction volume, you can't just throw bodies at it, right? It's not a human thing. You need automation. You start to need AI to start to look at suspicious activity, fraudulent activity. So we're seeing a lot of that around the AML and the KYC processes. And then even in payment security, that's another area that's emerging where we're starting to see AI and machine learning applications. You're starting to look at SIEM logs and access management, some of the containerization. There's applications around that, but you've got a wealth of data out there that you can start to analyze and monitor your environment. And so a lot of those learnings that you saw from banking and payments, the investments that were made in those spaces are now starting to manifest themselves into capital markets and insurance. Mainly, because they're going through the same transformation. So there's a lot of lessons learned that can happen in those spaces. In cap markets, we're dealing with a client right now in New York that has a trading platform, and they've got 20 years of exhaust data from their trading platform, right? Where you can start to analyze down to the trader in their seat, what their trading behavior is when there's, different rate increases in the market or different types of corporate actions that are going on. They're starting to leverage AI in some of those cases. We mentioned some of these fintechs out there that are doing big data ingestion to help compile regulatory reporting for CCAR, for MiFID II, for different types of stress testing. And then also the client onboarding. One of the companies that we're looking at is they're leveraging and trying to make that customer experience, because as you start to open up a wealth account or a brokerage account, in wealth management, it's just a cumbersome process. There's a lot of paperwork. They're trying to really mimic the experience that you're seeing in companies like Lemonade, in terms of making that more of a mobile experience through chatbots where you can start to sign off and have that more seamless. But insurance, and that's why we have this highlight. This is obviously the focus of this conference, and we talked about a lot of these, but we see insurance being a huge opportunity for AI and machine learning. A lot of our clients that we're helping with on their transformational journey. I think I spoke to some of you guys here that we've been working with a large global insurer for the last 3.5 years on their transformational journey, getting them off client server, moving them to a hybrid cloud environment, a data lake where they can start to put in different types of AI machine learning. They've got data scientists in the environment looking at different use cases, and some of the things that they're looking at, they're doing some work around leveraging AI and autopilot policy issuance. There's different types of companies out there. There's a company specifically called Root that is able to mimic, and you download this application and you test drive it for 2 weeks, but it mimics it starts to analyze your driving behaviors, whether you're speeding, whether you're going through traffic lights, whatnot. All this data is collected, and they're able to mitigate some of that policy issuance just because they have additional data sources that they never had before. There's other applications around claim loss, leveraging some of the technologies that you guys see in iPhone 10, where you've got these, facial recognition types of platforms and technologies that you can use to predict claim losses. And I think in one of the presentations we saw yesterday, where we were looking at some of the neural networks, how if you can take video and photo, and it starts to go through different hierarchies of how you make decisioning. They're starting to leverage some of those technologies to really predict claim losses, which affects their liquidity position. And then insurance fraud, another area that's emerging, where leveraging big data kind of scrape the social network. So if someone has a disability claim, what we're seeing now is a lot of rescissions happening, because you can have these companies using AI go out to social media